Welcome, and we're going to talk today about how to trade the volume spike strategy. This is the strategy that's built into our volume bot, and specifically, we're going to talk about how to use it for funded account trading. And we're going to talk about the strategy, the exact rules, some examples, and some risk management. Okay, first, this presentation is for educational purposes only and does not constitute financial advice. Trading involves significant risk and is not suitable for all investors. The decisions you make and the actions you take in trading are solely your responsibility. Past performance is not indicative of future results. Understand and acknowledge these risks before participating. So let's talk a little bit about volume spike. Like, what in the world is a volume spike? So you guys have probably seen a stock chart or a futures chart, and at the bottom of most of them, up top, of course, are the candlesticks, the chart itself. Down below are what we call like volume bars, right? It's volume. And so a spike is something that looks roughly like this. It's basically a huge spike, right? Huge spike in volume, right? Volume spike. Now, technically, before all this happened, this right here was a spike. It was bigger than the others, but we're not looking for slightly bigger. We're looking for significantly bigger. So you guys can see why this happened. So at this point, we're not even looking at the chart itself. We're not looking at the candlesticks. What we're looking at instead are what? The volume at the bottom of the chart, okay? So essentially there's a couple steps here. We're going to wait for the volume spike to come in. We're going to wait a certain number of candles. Let's just say 3 candles, for example. And then what we're going to do is we're going to wait for a break in a certain direction. We'll talk more about this here in a sec. And then we're going to place a trade, okay? So it's a volume spike. We're going to wait X number of candles. We're going to wait for a break. And then we are going to trade, okay? So how does this work? What are the rules? Let's break down the strategy. So number one, we're looking for an average volume spike of 3x. What does that mean? Well, if we have volume that looks like this, right, just up and down volume, and then we have something that looks like this, you guys can agree that's at least 3x. We'll say 3 or more, 3x or more, the average volume, right? And then the next thing we have to kind of set aside or define is what are the, like, how far do we look back to figure out what is average, right? And so we're going to look back 7 candles, right? So one's just a handful of candles. We're just going to look back at 7 candles. And these are all variables. These are things that we can adjust. But ultimately, I want to show you the base strategy, and then we'll show you some real life examples, okay? So number one is our volume spike. We're looking for 3 times the normal volume. You guys can agree that is at least 3 times the normal volume, right? And we're only going to look back 7 candles. So we call it the look back. How far backwards are we using to calculate or compute our average? Obviously, the farther back we go, the more, the more weighted it is versus like current time. So we're only looking back just a handful of candles, right? And then the other thing is we want to know how many candles after this spike do we need to wait, right? So we would say 1, 2, 3, 4. We're going to wait 5 candles, right? In this example, 5. Now, I don't want you guys to hard code these rules because some of these variables do change a little bit, and we'll talk more about that in a second. But ultimately, that is the problem. So let's run through the mechanical rules here. And of course, we're not predicting, we are reacting, of course. So let's talk about the rules. We're going to, number one, wait for that volume to spike. We're going to wait X number of candles in our example. We're going to play the breakout of the following candle. So for example, if we're waiting for 3 candles, the next candle would be the number 4 candle. If we're waiting 5 candles, the next one would be the number 6 candle. Okay, so I got some examples. Hang in there and we'll get into it. Next, we're going to enter kind of a break above or below what we refer to as the signal candle. Now, how many of you guys have ever used or are familiar with the opening range breakout strategy. The opening range breakout strategy. Type a 1 in the chat pane if you are familiar with the opening range breakout strategy. No one? Someone. One person. Okay. So what we're going to do is we'll go over that here in a sec. And then what we're going to do is we're going to set up our stop. Now, you guys probably know this, but for those of you new to trading, a stop loss are your emergency brakes. It is your parachute in case things don't go in your favor, okay? And then, of course, we always preach fixed risk per trade. And again, no exceptions. What does that mean? That means we're not going to load up and take our entire account, put it at risk on one trade, right? It's the equivalent of going to Vegas, taking all the money you have saved your whole life and putting it on one trade. And it win or lose, like you're betting black or red, right? Black, it doesn't matter. That is what we're saying we do not do. We're always using fixed risk. And what does that mean? We typically recommend when you first start, obviously depending on your account size, that you use a fixed amount of risk. What does that mean? That means if you lose, you're going to lose $100, right? So, and if you win, you want to win usually 2x. So 2x your 100 equals $200, right? So we want to risk 100 to make 200. Now, there's some of us who you're like, okay, that's great, Matt. So obviously, even with a 50-50 win rate, even with random eeny, meeny, miny, mo odds, 50-50, when you lose 100 and you make 200, your account would essentially look like this, right? You lose 100, then you make 200, then you lose 100, then you make 200, then you lose 100, you make 200, right? And what's happening to your account over time? You're growing. Now, ladies and gentlemen, you don't have to have a very, very high win rate. I don't know if you knew that, but you do not have to have a very high win rate. If you're winning like if you're risking $1 to make 2, if you're risking 100 to make 200, okay? Now, what if you're risking 100 to make 300? You can have an even lower win rate. Now, most people get so obsessed about win rate. What's your win rate? What's your win rate? And it is one statistic and one ingredient in a whole entire formula of success, okay, when it comes to trading. So I usually use this example. I just got back from Las Vegas a few weeks ago speaking at the Money Show in Las Vegas there on the Strip. And essentially, imagine if I had I pulled a chair up to any table game, let's say blackjack, okay? And let's say I had a strategy that won 90% of the time, right? 90% of the time. 90% win rate. And most of you guys would be like, oh, that's awesome. Well, the reason that by itself sounds impressive is you have to know the rest of the details. Like when I win, how much do I lose? When I win, how much do I win? And when I lose, how much do I lose? So for example, if I win $25 every single time, every time I win $25, 90% win rate, you would say that's pretty good. Well, most smart traders say, well, what is this number right here, Matt? Don't hold back. Tell us what this number is. And the answer is, imagine if you win $25. If you lose your house. Okay? Now, how many people are now excited about a 90% win rate? No one. 90% win rate does not automatically mean anything in and of itself. Do you guys see what I mean? So imagine, I'm not saying that 90% win rate is bad. I'm just saying that is not the full story. Obviously, a high win rate is fine, but that's not the end-all be-all, okay? So let's talk about the details, of course, being consistent over time, which is what we preach here at Push Button Trading. Being consistent over time is the thing that really matters more than anything. If you think about it, losing weight, getting in shape, is being inconsistent or consistent? Which way is the fastest way to being successful and losing weight, right? It's being consistent and consistent over time, right? Most of you guys probably could realize working out once a day, every other day is far more superior than maybe waiting to the weekend and putting in a 5 or 6 hour workout, right? Consistency over time always is better every single time, okay? So let's talk about the strategy. Let's walk through the examples here. And in this example, we're using a 3x volume spike. And this is an actual real trade. I did take this screenshot right out of our software. And what I'm going to do is we'll talk about on the left the rules, and on the right we'll show the example. Okay. So what you'll notice here is we have some volume spikes coming in, and this being our very first one here, we'll call this the number 1, the number 2, and the number 3. So we're waiting X number of candles. Okay, so in this case, we're going to wait 3 candles. So what we do is we're minding our own business, got minimal volume, and then wham, this huge volume comes in. Now, this could be the stock market. This could be the stock market opening, right? It's like the first 20, 30 minutes of the stock market open, and it goes from little to no volume to massive volume. That is somewhat normal, right? Sometimes it depends on what stock it is. Sometimes in the middle of the day, you'll have a random spike due to news, right? Have you guys seen the stock market move wildly at all in the last, since January 1st or January 2nd of this year? Yeah, absolutely, right? Oil prices, like lots of things have random spikes. And so what happens is the volume spikes themselves, it's not obvious until it's done, but looking backwards, you're able to see that that occurred, and then we're going to wait a certain number of candles before we pull the trigger, okay? Now, our software, what we have is we're teaching the actual strategy itself, and our software puts these little blue dots right here. Do you see that light blue dot? And that's what we refer to as a signal candle. Signal candle. What is, oops, I got to spell. Signal candle, okay? So what is a signal candle? That means, for those of you who've used the opening range breakout before, your very first candle essentially is your signal candle. In this case, we're defining a signal candle that's not the first candle, and we're applying the same or similar strategy, okay? So literally we're using 3 candles, waiting 3 candles, and we're using the number 4 candle as our signal candle, okay? So let's take a look at how this lines up. So I'm going to do my best to draw straight lines for you guys. This is the very first candle that comes in. I'm just lining up the volume because I realize just looking at it, you probably can't tell what goes with what. There we go, 1, 2, 3, 4. There we go. And what you'll notice is we're waiting. Our rules dictate that we wait 3 candles, right? 1, 2, and 3. And then we wait for our 4th candle to come in. And our 4th candle is our signal candle right there, right on the money. And so what are we waiting for? Well, if you guys can see, this candle comes in. It looks something like this. And we're waiting for, this is our signal candle. If it breaks above or below, we're going to go long or we're going to go short based on what happens next. And as you guys can see here, boom, it actually breaks lower. So what does that mean? That means we're going to have orders waiting on either side of that, right? And we'll talk more about that in a second. We're going to have a long and a short order waiting. We're going to get long if it goes above. We're going to go short if it goes below. Just looking at the shape of that candle, most of you probably could have guessed money. It was probably going to go lower just because it closed so low to the end of to the bottom of that candle anyways, that you're probably going to go lower before you go higher, right? And remember, the volume spike has already given us the green light. Now we're just patiently waiting our 3 candles, and then we're waiting to see what happens with our number 4 candle, and we're waiting for a break lower, okay? Now, in this case, for those of you who are wondering, hey, Matt, what chart is this from? This is actually one of our this is the volume bot setting number 172, but this is actually in queue on a 7-minute chart. That's where I took these screenshots from earlier. In queue on a 7-minute chart. Now, does that mean it always works? No, it doesn't always work, but it doesn't have to work every time. It has to work over time. That's a huge distinction, right? Most of you guys want to win every trade. Trust me, stop trying. Stop trying to win every trade. You're going to frustrate yourself and be a nervous wreck all the time, okay? So, again, we're waiting for that number 4 candle to come in, and in this case, it breaks lower. What does break lower mean? Well, it means we draw a line at the low and the high, and imagine none of this has come in. What happens after that candle closes? We go lower, right? And again, we have it's called a special kind of order setup we'll talk about in a second. That basically is say, hey, we're going to wait for whatever happens next. We're going to be in long or short either way, whatever happens next, okay? And again, we're using this number 4 candle as our signal candle. And in case you forget which one's the signal candle, it's the one we throw the little blue dots on, okay? Now, these are our technology automatically does all this and can calculate and tell us what are the optimal settings going back 3 or 4 years, and can tell us what the optimal settings are on gold, NQ, ES, crude oil, like all kinds of things. Okay, so again, in this case, break below and we're short direction. And once we're in the trade, we're basically now in the trade at this point. We're going to go ahead and throw our stop loss, and we're going to also draw this green line. And remember, we were talking earlier, if we risk $100, we want to make at least 200, right? Risk 100 to make 200. Why does that matter? Well, psychologically, every time you lose a trade, it has about double the impact negatively as a positive trade. Did you guys know that? Psychologically. So which means we're going to lose 100 and we're going to make 200. We need 2 wins. Oops, I did that backwards. We need 2 wins to kind of make up for the impact of 1 loss, right? So we're going to have 2 wins at 200 for every 1 win at, 2 wins at 200 for every loss at 100, okay? So what happens is we're getting into the trade. We're now triggered into the trade. We have our stop loss up here. You'll see there's a red line here that our software draws automatically. The gold line is kind of what we call the entry or an at symbol. It's where we got in. And then our green line down here is our take profit, okay? So what does that mean? That means we got into the trade, and literally after that very first candle, we're already going to be up. How much money would we be up if we're risking, we'll call this our R size, we're risking $100, and how much would we be up on the trade after this candle comes in? After this candle comes in. Alexis, is that a question? Are you sure? Is that a question you're asking? So essentially what I did was this represents +1, this represents +2. What is a 1 or a 2? Remember, we're talking about risk units, risk in dollars, fixed risk. So that would basically be, yes, that's correct, $100. We'd be up roughly $100, okay? Now, it does almost hit our take profit and then goes a little bit higher and then turns around and basically does a pump fake on us, making us think we're going to win and then we're going to lose, and then we end up winning, right? Now, how many of you guys would see all this play out exactly like this, candle after candle, and you would move your stop, you would tighten your stop, you would not let it do its thing. You would kind of try to manually intervene. And what's interesting for most traders is it's not actually about the strategy itself. If you've been doing this a long time, really the strategy itself is important, but just like the win rate, it's not the only ingredient, right? Why? Why do you say that, Matt? The strategy is everything. Is it really everything? I mean, I could put the winning strategy in the hands of someone who's not consistent, and will they be successful with it? Very low chance, right? I could put a winning workout routine in front of someone who never goes to the gym. Are they going to lose weight? It's like that is one piece, but you have to look at the full picture, right? So in this case, what happens? Entry here, stop here. The green line is our take profit, our target profit, take profit. And then in case you ever get confused, in this case, you want to go towards the green line and away from the red line, right? Simple enough. And you guys can see kind of what happens afterwards. Again, so stop is placed, and then boom, we hit our 2R target, okay? Now, ladies and gentlemen, let me make sure you guys are following me, okay? Now, I mentioned that this is NQ, and that this was a 7-minute chart, correct? Now, from the time we watched this very first candle come in, that represents 7 minutes, right? Each one of these candles is a 7-minute chart, 7-minute moment in time, okay? How many, by the time we set up the trade to here, how much time has passed in these 4 candles? Well, you would say 7 times 4 is 28 minutes, right? So 28 minutes has surpassed, okay? How many more minutes does it take for us to hit our take profit? Well, somewhere 1, 2, 3, and partially a 4. Obviously, it went lower too. So somewhere less than 28 minutes. So we watched it for 28 minutes. And this is the part that humans, like traders, just cannot sit still. You see something and you feel like you're missing out and you got to be in the trade. And ladies and gentlemen, I will tell you from experience, having done this for 10 plus years, you have to be patient. Or the market will humble you and it will take your money and it will say thank you for playing, and you will lick your wounds and hopefully not lose your entire account, and you'll have to come back. Thank you for playing. Let's try again tomorrow, right? Can any of you guys relate to that? So ultimately, at the end of the day, it's about following the strategy and executing consistently. Justice, it is absolutely. Human errors are the worst. But you know what? It's part of being human, right? Making errors is part of it. Okay. So let me know if you guys have any questions. Throw that in the chat pane. What I'm going to do is we're going to look at the same example in reverse. We're going to look at a long example here, and pretty much same rules, same situation. Is we're waiting for that volume spike. You see the volume spike to come in, right? We got our 1, 2, and 3 candles coming in, and then we're waiting for candle number 4, which is right here, the signal candle. We got our little blue dot that gives us the kind of the idea of what is the signal candle, what is it doing, which one are we looking at. And then what you'll notice is the distance between here and here. If we get in here and we go here, this would be -1R or minus $100. You'll notice that in this example, our target is way up here, which would give us, if we're risking 100, it would give us 300, right? Let's say we risk 1,000, it would give us 3,000. Now you're like, well, Matt, I thought you just said a few minutes ago when you're starting out not to risk, to risk the same amount, and you're supposed to risk the same amount. Yep, absolutely. So let's say that we risk anywhere from $100 to $250. Let's say we risk $250. How much is 3x that? You would say 750, right? So we're risking 100 to make 300, risking 250 to make 750, okay? Now, the way that fixed risk works is you use the same number, and I would say for a minimum of at least 3 to 6 months, okay? That doesn't mean randomly picks a number between 100 and 250 every single time you take a trade. No, pick something and stick with it. Use the same fixed risk for 3 to 6 months. Obviously, if you're struggling and the number, if you're using $250 and it makes you feel too anxious, then go down in size. That's it. It's pretty simple, right? Go down in risk size. So again, you want to use the same one for 3 to 6 months. You don't want to eeny, meeny, miny, mo, pick one of these numbers every time you make a trade. And we'll talk about why here. That's important here in a minute, okay? So in this case, what we do is we get into the trade and again, this is in Q on a 7-minute chart, okay? Here we got our entry here. Once we're in the trade, we're going to go ahead and throw our stop loss here. That red line is our stop loss. This is our entry. And then you'll notice we have a 3R target auto-calculated. How did it know to do that? Well, that's actually a setting that we can in our software, but we're teaching you guys how to do this manually if you wanted to learn how to do this manually. And so in this case, what we do is we set up our take profit and our stop loss, right? Our take profit up here and our stop loss down here. Stop loss, SL. There we go, stop loss. And again, if you're in the trade and you forget which way you want to go, you always want to go towards the green line, okay? Away from red, right? You want to go towards the green light, not the red light, essentially, okay? So then what happens? Well, you'll see that candle number 5 comes in. This isn't candle number 4. Candle number 5 comes in, and we break above, right? We break above, which means the next candle goes above. And what we have is an open order that says if we go above, we're going to get long. If we go below, we're going to get short, right? And these are really, really simple calculations. It doesn't require a lot. If you just wanted to And you'll see in this exact example, in our example, we only use one contract, right? Now again, this is NQ, so it's a bigger asset than MNQ, right? We're talking about NQ, and you'll notice the some of the pricing that exactly got in. All these are computed, calculated automatically. And just to be clear, this does not give you an alert. What this does, it actually places the order for you. Okay, so this isn't like an alert service. This puts you into the trade. Once I'm in the trade here, we got our stop is placed down here and our take profit again is up here. And you'll see that we actually didn't hit our target, but we did. I'm going to show you guys this. We ended at the end of the session close. What does that mean? Well, the futures market closed. And as you guys know, we're talking about funded accounts. We'll talk more about that in here in a second. But the futures market closed. Most funded account programs want you in cash by the end of the session, right? The end of the day, the end of the trading day, you have to be in cash. Why does that matter? Well, that's one of the rules. And one of the rules is don't break the rules, right? So in our example here, we want to exit on the session close. So we exit right here. So essentially, we risked, in our first example, we risked 100. We tried to make 300, didn't quite get there. And so we auto closed at plus 200. Still a win, not quite what we wanted, but good enough, right? Again, the idea here is to execute the rules exactly, okay? Now, some of you guys are probably, it occurred to you like, Matt, we just looked at a long and a short and a long example. How do I know which way to go? Like which direction? Again, remember that blue dot tells us what our signal candle is. That's the one that we're focusing on. Kind of think of it like a template. We're going to draw the high of the candle and the low. The color doesn't really matter, whether it's green, black, white, red, doesn't matter. The color of the candle. And we're going to use what's called an OCO, order cancels order, right? Or a bracket order, right? Which means we're going to get long or short depending on what happens next. Okay. Most brokers support this. There are some prop firms who don't like it, but they allow it. They don't, prefer it. We won't talk about which ones those are, but essentially they all have support for it. It's a fairly common thing, including like traditional brokers as well, like Schwab, like Interactive Brokers, any of the traditional brokers, even NinjaTrader brokerage service supports it. Okay. So we're going to go long or short based on that signal candle. And what happens here in our example is if we break lower, we're going to get short and it's going to auto cancel that long order. Okay. And again, this is the bracket order. This is kind of the benefit of this type of order type, because it's like, I don't know which way it's going to go. I have some theories, but I don't really know. I would guess it'd go lower only because we closed right here, so close to where we're going to get in. Versus if it closed up here, I'd be tempted to think it's going to go higher. Obviously, one candle alone isn't enough context to make, I wouldn't bet a lot of money on that. With just looking at a single candle in and of itself. Again, don't fall in love with one little ingredient. Think about the whole thing. Okay? You can't hear anything. Can you guys hear me? Yeah, I think so. Okay. Sorry, Kim. Not sure. Okay. So next, the other example is if we break above, it's going to auto cancel that short order, right? That short order, it's like we're going to get long and we're going to cancel the short. We're waiting for a move higher like that. Okay. So here's where most people mess up is the strategy itself isn't hard. It's got a couple steps. Lots of practice, it's going to be a no-brainer, right? What's hard? Being patient. Like, why is being patient so hard? Well, we live in a microwave world. We want everything now. And unfortunately, I've learned this lesson. Tracy, some of our coaches have learned this lesson over a decade plus of struggling, is the market will present certain opportunities. You can take advantage of them or not. But it's kind of like hunting and fishing. You can go out on the lake all day, never catch a fish, or you can go out in your first 10 minutes on a random day and catch a ton of fish. You can't make the market do what you want. It doesn't know your name. It could care less about you. The idea is, are you in a place to take advantage of certain things like volume spikes, as we're talking about today, right? The other thing that happens a lot that we see all the time is if you have a loss or maybe even 2 or 3 losses in a row, you're like, you know what? On this next trade, Matt, I'm going to double and triple my risk so that I can make it all back in one trade. How many of you guys have ever done that? Is there any honest people in this webinar who've ever done that? Go ahead and type a 1 in the chat pane. I'll type a 1 in the chat pane. I've done that before. I've tried to make it all back in one trade. And how did that work, ladies and gentlemen? The market can smell your fear and it knows you're coming, and you're just, you're like just the market's a shark and you're just swimming helplessly and it's going to take advantage, right? Okay? So the other thing that happens is most people want to change and adapt the strategy. Imagine we talked about this recently with my team. Imagine every time let's say you're in pro sports, right? And every time you have a losing game, you're tempted to retool everything, right? Instead of just saying, you know what, it happens, we gave it our best, nothing else we could do. Imagine every time you take a loss, you want to retool the strategy. Imagine that. You're going to be frustrated for decades if that's your strategy. Why? Because you can't win every time. It's not possible. I kind of yielded and kind of accepted that's just how it is. Like I used to tell people that worked for me years ago, I'd say, align yourself with reality. Like, that's just how it is. The more I want to live in a la-la land and think that I'm going to tell the market what I want and what I need X amount a day or month or week, it doesn't care. It really could care less. You can tell it whatever you want. It does not know your name. It does not care, okay? The other thing that happens when it comes to funded accounts or executing strategy is some of them refer to them as DLLs. This is not a Microsoft DLL. It's a software reference. This is a daily loss limit. How much are you allowed to lose in a single day? Okay, we're talking about funded accounts here in a sec. And ultimately, what happens, what we've noticed is trailing drawdown punishes inconsistency. Not bad strategies. Again, 3xing, 4xing your risk to try to make it all back. Maybe that works. Maybe that, probably not. But every once in a while, it'll work. And you'll think that, oh, I hit the jackpot. I'm glad I did that. And then you start forming bad habits. Now, the question you're probably wondering is, who's this guy with the microphone problems? My name is Matt DeLong, and I've been trading stocks and options for 10 years. It's been a while. I've been at this for a while. I don't know how many trades I've ever made in my life. Maybe 500,000 trades. I don't know. That's a lot of trades. And I've been working with stock trading automation for most of those years. I was a former CTO of a trading education company, decided to start my own, and then I've been a speaker at the Money Show, like I mentioned, for the last 5 years. So let's turn the page a little bit and let's talk a little bit about funded accounts. This is one of our favorite things that we think about that helps brand new traders or struggling traders or traders who don't have their own capital. Okay. Now let me also say that funded accounts are not the destination. Okay. It is a bridge to, it's a learning bridge, which means don't camp out and pitch a tent and live there and camp out there. Funded accounts are kind of a bridge from not having some money to having more money, right? Maybe you got a little bit, and we've actually seen people in our own community do this once they get accounts funded with our technology. They will pull some money out. We get screenshots frequently from customers, clients who pull money out and then they start building their own trading account. And all they're doing is they're using funded accounts, kind of like seed money, right? It's like starter capital. We're using seed money. We're using a few dollars here to make significantly more over here, okay? That doesn't mean you stay on this bridge. That means you can use the bridge, but it's not a super, it's not a long-term strategy for 20 years to use funded accounts the rest of your life. That's what I'm saying, okay? So again, use it, think of it like starter capital, put it to use, take advantage of it, grow a funded account. Now let's talk about how funded accounts work for those of you who aren't familiar. In our example here, we're talking about a $50,000 account. Now before you say, Matt, I don't have a $50,000 account, that's perfect. Why? Because a funded account let's say from Lucid, is about 30 bucks. They have a couple different plans, different promotions, different specials. You're like, Matt, how do they give me 30 bucks and get in return, I get $50,000 from my 30 bucks? Well, they put it in an account and you're paper trading. You're basically proving yourself. Some people call them, refer to them as challenges or evaluations. And what you do is you have a goal, a profit target of $3,000. Take that 50,000, grow it to 53,000, right? But you got to follow the rules. And one of the rules is you can't lose more than 2,000, right? So what does that mean? That means your 50K has to go up to 53. But it cannot go down to 48. Okay, so positive 3, 4,800. Okay. One of the other rules is you have a daily loss limit. You cannot lose more than $1,000 a day. So ladies and gentlemen, if you're risking $100 per trade, how many trades do you have to lose in a day to, oops, I just read the answer. How many do you have to lose in a day to hit $1,000? Negative 1,000. And the answer is 10. 10. You have to have 10 losing trades. Now, I don't recommend you actually take that many trades in a day. 10. Because I will tell you, however many trades you take in a day, whether it's 1 or whether it's 100, you have the ability and the probability and the possibility to win every single one or lose every single one. How many of you guys have figured that out? If you take, you're like, you know what, I'm going to take 20 trades today or 30 trades, and you lose every single one. That's kind of defeating, right? And you're like, oh, well, trading must be a scam. The market's out to get me, right? All those little things that we tell ourselves, okay? So in this case, again, that's why we recommend risk per trade is a fixed amount. You use a single amount. You pick a number between here and here and stick with that for, again, 3 to 6 months. Don't change it up every single time. Trust me, I've been there. I've got the bruises. It's not worth it, okay? So the next thing is the math. So basically, like, how does this work? Well, if you're risking $250, you're risking $250 to make $500, and your goal is $3,000. You only need about six R's, right? 6 wins rather. So 500 times 6 is 3,000. You only need about 6 wins. Obviously, it depends on how much you're making each time. So it could be, how much you're risking each time. It varies, but ultimately that's how that works. Okay. So here's a question: is what if this strategy that might be a little bit intimidating for some of you, what if it was executed automatically? Like, what if the risk was fixed? Like, what if you decided, hey, we're going to automatically trade $100 risk for you automatically in your funded account? And what if you never missed a trade? What if you can copy it up to 20 evaluation or challenges accounts? Like would that be helpful for you guys? The problem is this right here, is the emotional, psychological challenge that manual trading takes on a person, okay? Most of you, when you first started or wanted to start to learn to trade, you were automatically dreaming of the dream vacation where you're going to go to Greece and spend a month, or go to Italy, go on an amazing cruise, go to Hawaii, right? Fill in the blank with your destination travel of your dreams, right? But what you didn't realize is it is hard. It's way harder than anyone thinks. And most people have this, they second guess themselves, they come in late, they try to, it's the human element sabotages all of it, okay? And sometimes you're like, you know what, last couple trades, if I would have just not had a stop loss, I would have made a profit. But then you cancel your stop loss, and that's the one time where the trade just gets in and just falls off the cliff, and you blow up your funded account, okay? Now, we have quite a few clients who tell us that they've been trying to trade manually for years and have never, or maybe they came close once, have never got an account funded until they used our systems, our strategy, our technology, okay? So here's what we like, and that's kind of why we're here today, is what is a systematic or a rule-based way to trade where you're executing the rules exactly. This human element of hesitating and waiting and All that goes out the window. Why? Because we're risking the same exact size, or the same size every single time. And then our stops are automatically calculated. They're exactly where we plan them. And we don't bring the systematic trading, rule-based trading. It doesn't really care about what happened yesterday. It really doesn't, right? We bring that baggage to the table. If we had a, argument uh, with our significant other, right? We bring all that baggage to the table. So systematic trading, here's what we do is we actually have some pre-built strategies. We'll talk about it in a second. Again, we're just teaching the base strategy today. And at the end of the day, we have all of our technology. Actually, we have a portfolio of trading bots. It's not just one. People ask, what is your win rate on one of our bots? We actually have 8 bots. But we actually now have 350 pre-configured settings. We'll talk about it in a second. So risk controlled strategy, again, we have a fixed risk that we're putting in each and every time, okay? And it's not just a bot, it's a portfolio of trading bots that are working together, okay? Now you guys have probably noticed this, like in the news, systematic trading has become significantly more profitable over probably since COVID. They're used by lots of big funds, commodity traders, futures. And at the end of the day, the technology executes the strategies systematically and consistently. Again, that's the problem that this technology can solve, is this and this. It cannot guarantee outcomes. If you're trading and you want a guaranteed outcome, I recommend you stop trading. I recommend you put your money under your mattress and you're guaranteed to not lose money, except for inflation will outrun you, right? So again, we bring all of this to the technology that is used by big funds, and we'll look at that in a sec. Bring it to individual traders, okay? So why does it matter? Why do you have 8 bots? Like, what does it matter? Well, you guys probably know that markets move in different phases, right? It's not always up. You guys remember during COVID, the market went like this, and then it went like this, right? Literally, this was about 3 to 6 weeks, something like that. And then it went higher, right? And then 2022 went like this, and then 23 and 24 went like this. And 25 went like this. 26 went like, so far it's gone like that, right? So again, different markets, right? Trending markets are markets that are screaming higher or screaming lower. They're trending one way or the other. Range bound markets are markets that are kind of like a little bit kind of like 2026, the last since probably October, November last year. Kind of just up a little, down a little, up a little, maybe leaning a little bit lower, just a little bit. And all those things are just part of life, part of how the markets work. And I guess we have high and low volatility, meaning I think of volatility as like the excitement factor. You guys have ever been to a live football game, a live basketball game, that live energy, that's the kind of like the excitement factor, okay? Now, the reason that we like the multi-strategy portfolio kind of for trading bots is it really reduces your reliance on any one strategy or edge. If you've ever used a single trading bot in the past, you probably know that it works pretty well until it doesn't, right? You can make a ton of money and then lose it all in a week. We can point you to lots of reviews of other companies that try to build an entire company around a single strategy, a single bot, and it works great until it doesn't. So what we did is we try to smooth out the performance, and the idea with the different strategies is they can adapt. You can have a good cluster, a good handful that adapt to the different market conditions, okay? So really this is kind of what we've built, is a structured, kind of a structured framework where if you're looking for consistency and trying to guess, that's kind of what we built. And we have some automation that executes the exact rules themselves, executes the exact rules, and the technology is the execution engine, okay? And again, it's all rule-based. You can scale up to, we have tools that allow you to copy trade up to 20 accounts. Everything's defined risk, so you define how much risk you want to lose per trade. Obviously, that depends on your account size, depends on what your daily drawdown limits are for the account chosen. Obviously, a $150,000 account has different rules than a $25,000 account, right? Different drawdown limits, so we recommend you adjust accordingly. And then our tools, our technology, actually, we can show you the live tracking of how well it's performed since you've been running it live. But at the end of the day, really, the education we teach builds the edge, and the technology protects our edge, if that makes sense. And so what we have is we actually have a structured rule-based trading system. And again, it doesn't solve all the problems, but it solves some emotional, manual frustration problems, right? And that really changes everything. The reason that that's important is that most traders struggle because they lack knowledge or they don't follow structure. Now, this is, if I'm talking to you, sometimes you react, sometimes you second guess, and sometimes you override your own strategy because you think you're smarter than the market in those moments of weakness, right? Now, automation has three big advantages, which is discipline. You don't have to worry about being disciplined. Some of you guys probably run your life like clockwork. If you had a military background, you're highly, highly disciplined, probably, right? Everything is like exact and precise. That's what our technology does. And then again, because of the technology throwing out orders in half seconds, it's going to get in and out of trades way faster than you can even blink, way faster than you can react. So there's some speed element to it where you're not missing out on things that you're looking at it and you hesitate and you miss it, right? And then of course there's the consistency over time element, right? That happens that's a huge problem for people who are trading manually, right? And yes, copy trading does glitch sometimes. So we'll talk about that in a sec. Yep. And so again, the real thing is this is technology built for funded account programs, and our technology removes the largest variable in trading, which is the human emotion. Now, I've not figured out how to not be human. I've not figured that out yet. Maybe in the next couple decades, Elon Musk will push us into that. But until now, we're human and we have normal emotions, fear, anxiety. How do we outrun that, right? How do we deal with those? Those human emotions are normal things. I'll tell you that, normal. Don't beat yourself up if you're frustrated. It's normal, okay? We get into trouble when we allow those emotions to make our decisions for us, when we essentially outsource our decision making to our emotions, right? And I'll tell you that I've seen it happen myself, and you can catch yourself. You're like, oh my gosh, I just made an emotional decision, and I essentially punched myself in the face, like because I made an emotional decision. I knew better, but some reason I wanted to do it anyways. Okay. So essentially, what we have is that we have a here's the details of the risk management. Oops. There we go. There we go. Okay. So it's really what we offer and how we're different from everyone else is we offer a portfolio of strategy. It's not just one. It's not just two or three. We have 8 bots and 350 settings. 350 pre-configured settings. So imagine grabbing 350 of these and say, you know, I want to run 7 of these, right? How many possible combinations of 350 can you create? Does anyone know how many combinations? Imagine reaching into a jar of marbles, pulling out, there's 350 marbles total, and you can mix and match unlimited amounts. Anywhere from 1 to 350, I assume, right? Hundreds of trillions of possible combinations, okay? When people say, show me the bot performance, or like, well, we have hundreds of trillion, like, we'll just say millions, because that's a big number, millions of possible combinations. So essentially what we've done is we kind of set all this up, and it's not just one trading bot, it's 8 bots with unique strategies. We actually just recently, as of like a few days ago, we went up to 350, and there's millions of possible combinations, an entire suite of bot portfolio tools. And what I want to show you is this is what we have essentially is 8 bots, over 350 settings, and a portfolio approach that doesn't depend on any one strategy to survive. Have you guys seen anything like this before? And there's what we have is we actually have a workshop that we're offering, and you get access to our 30. You get access to our technology for 30 days. And essentially, what we're trying to do is to answer the question, which we can't really answer for any of you. You have to do it on your own. Is will this work for me? I can't answer that for each of you. You're gonna have to answer that on your own. Will this work for me? And typically, most of the trading systems we've seen are typically anywhere from 3. We've seen all the way up to 10K per year. We're not priced that high. Okay, most companies offer 3 to 10K per year, and there's no free trial, nothing. It's good luck. Okay. Now what we've done, and we'll show you here in a sec, and I'll show you a demo. But what we've done is we have built my team, my CTO Tracy has built a significant suite of tools that we'll look at here in a second. If you guys want to see it, that shows. You can look at all these different bots, how they're combine them a whole bunch of different ways, look at their performance, and then go back, let's say 4 years. Do you guys feel like 4 years is a pretty good period of time to go back and look at how well any one strategy or a combination of strategies has performed? Do you guys feel like 4 years is a better, we'll call it a sample size? It's a better sample size than maybe a month or 2 months or 3 months? Why? Because you're going the difference between maybe 15 trades to like 2,000 trades. Which one do you think is going to have better quality data? 15 trades sample size or 2,000, right? Like 3 months or 48 months? Yeah, absolutely. The larger, of course. So what I'm going to do, ladies and gentlemen, is I'm going to show you how this works, and we're going to take a look at the system itself. If you guys want to, I'm going to show you guys how this stuff works, and we're going to take a look at our software and our portfolio tools, and I'm going to show you that we have a far superior thing than anything you've probably ever seen before, ever, okay? So what we're going to do is we're going to pop over here into NinjaTrader. Can you guys see my screen? We should be looking at our NinjaTrader. This is our own software that we literally are releasing tomorrow. We've kind of had some beta tests. And what we're going to do, ladies and gentlemen, is our software has 3 main components: builder, analyzer, and a tracker. Okay? Builder, analyzer, and a tracker. Those are the 3 main things. So what we can do is we can say, you know what, I want to look at every day of the week, and I want to trade micros and minis. So we're talking about futures, future micros, future minis. And I just want to look at the volume bot. Just show me the volume bot, Matt, because that's what we talked about today. How well does that work by itself? How do we combine this? And what you'll see here is we're building, we're analyzing, and we're looking at every possible combination of every possible combination. Give it a sec, and it'll actually spit out, our software will spit out, here are some possible combinations. And you can very easily pick and choose what you want. So we'll give this just a second. There we go. And so what we have on the left here are a bunch of different portfolios that shows per month, the total drawdown, right? Now, these are pre-built, okay? These are not pre-built, that's not the right word. They're predefined, maybe predefined settings. And essentially what we can do is we can look at each one of these, and we can look at, okay, if I like this portfolio right here, oops, if I like this one right here, this is showing me all the strategies. Remember, we have 380. This shows the ID for each one, each and every predefined. You'll notice YMNQ is NASDAQ. Does anyone know what GC stands for? What asset, instrument, and futures GC is? Or what MGC stands for? Does anyone know? What is GC? It's not general contractor. Does anyone know what GC stands for? Justice says gold. Yes, gold. So GC is our gold, and MGC is our micro gold, mini and micro, which I never like those names, mini and micro, because they're both kind of denote small things, mini and micro. Anyways, so what you'll see here across the top, though, is you'll see what's the portfolio done, what is the max drawdown. This is Obviously, significantly more than what you're allowed to have with a 50K account with $2,000. But what it's showing you, average monthly profit factor, in this case, the win rate is just a little bit low, and it shows that it made 5,945 trades. Now, do you guys feel that that is a pretty amazing number of trades overall to make a, we'll call it a sample size? Okay. Now we're able to look at these, each one of these, look at the sort it by profit, drawdown, and we're able to say, you know what, I like all these, but I don't like the drawdown of this guy right here. I don't like this drawdown. I don't like this one. So we can just X them off, right? Turn them off. And what we're able to do is go up here to send to the analyzer, okay? Now, again, all we did is we picked a handful. Here's what we picked. All these are all volume bot. We're not running each one of these separately. We're running them collectively, okay? And what you'll see is YM, MYM, MES. All these all these are specific tickers, right? They're all specific tickers that you can run on. And so we're able to look at how well it's performed. Let's take a look at all the winning months, the losing months. You guys can see not every month is a winning month. People automatically think that if I use software, I'm going to automatically win. No, we can increase your odds, but we don't know what tomorrow is going to hold any more than anyone else does. And I used to track Warren Buffett's portfolio. I don't know if you guys know that he lists how many shares of what public company he bought in at what dollar amount. And you can do some pretty cool coding, and you can see what is the current price relative to how many shares he has relative to his price. And ladies and gentlemen, I'm here to tell you that I've personally watched Mr. Warren Buffett's portfolio go up and down 100 million, not in a year, in a week. I don't know if you guys can stomach that size, but for those of you who can't, we have some smaller tools that we can use and kind of help you with. 100 million in a week. That's crazy. Now, obviously, if you have like $97 billion, 100 million's a fraction of a fraction, right? So this will show every single trade that was taken. We can look at the like the monthly, how much we did per month, kind of look at it over time. The cool part, this is what I want to point out, and we can wrap up. But we do have an opportunity I want to share with you guys, and I'm running out of time, is these are what we refer to as guardrails. Okay, guardrails are basically over the 48 months. What is the biggest win, the biggest loss? And those are our boundaries that we set. And if it goes past that going into the future, then we would show you and say, hey, these have kind of violated the boundaries, the guardrails. And so essentially what you have to do is you have to decide, are you okay with this largest loss, largest win, your largest losing day, your largest winning week, like all these stats. These are essentially analytics. And the thing I like to point out for most of you, yes, is your max losing days and your max winning days. 11 losing days and 8 winning days, right? If you're okay with that, that tells you what you can expect. I've seen people say I'm okay with 11 consecutive losing days, but on day 2 they're freaking out. So this shows you over time. Again, this is our own software that we built, and essentially what you do is this helps you identify which bots to run, and then you go into NinjaTrader and you basically start up bot number 210, 50, 72, basically, right? And this is just, don't fall in love with these specific numbers. I just, what we do is just randomly grabbed a handful, okay? You don't set the max loss, Omar, but well, you can. Each bot has its own fixed risk. So if we were to go back into the builder, you can define like what your max drawdown would be here. If it's not necessarily per trade, but the bots work per trade, but you can define like what the max drawdown is here. Yeah. Does that make sense? So what we're doing, ladies and gentlemen, and I gotta wrap up. My out of time thing is coming. Running, yelling at me, but this is pretty cool because we also have this ability to generate this AI report card, and you guys probably saw the AI suggestions on the builder here. We don't have time to get into it all today, but essentially we have a way to look at how well things have worked historically and give us some suggestions. This connects to ChatGPT or whatever AI tool, Claude. There's a handful of them that you guys can utilize. But essentially, that's how it works. You can connect to these that are listed here, even some custom stuff that you can build there. But ladies and gentlemen, I'm out of time. That's what I have for you guys. What we're offering, yes, Aaron, the max drawdowns affect the funded account max loss. Yes, absolutely. Now, what I'm saying is that what I just randomly picked with all these strategies, I would not run this, what I'm looking at here, with what is that, $11,000 of drawdown. I would not run this in a 50K account, right? But sure, you could in a cash account, right? So let's talk about kind of what we're offering, because you guys are probably wondering, what does this cost? And I will tell you that people ask us all the time for a free trial, and our software is a little bit, it's not hard, but there's quite a bit to it. If you guys can imagine the difference between running a single bot and running a portfolio of bots, we have, I think it's 4.5 hours of training videos, essentially, that we have available. And essentially what we're trying to do is we're trying to help you answer the question, will this work for me? And I can't answer that. You're going to have to answer that on your own. So what we're doing is we decided to do a 30-day workshop where you get unlimited access to all of our technology. And we have a workshop for $299. And what we're doing is this is something new. We've never done this before. So we're going to test it out for the first 20 people. And essentially what it includes is kind of the step-by-step self-paced videos. Again, it takes about 4.5 hours. You get all bots and the pre-configured settings, all the software we were just looking at. And it does work with the major providers that support NinjaTrader, okay? And again, what we're going to do here is we're going to offer it for $100 off, $199, and it's basically kind of like a 30-day. See if this will work for you. See if this fits kind of what you're looking for. Again, people get accounts funded all the time. It's really tough to have a guarantee when you're running the software yourself, whether or not you're following the directions, whether or not you're still being emotional. So that's what we're offering, ladies and gentlemen. And I will I'll have my assistant Tracy put in the chat a link if you guys want to sign up for this. Again, this is not going to be available until the first 20 people that sign up. That's it. Our software typically used to sell for close to $2,000. And we're trying to give you guys a trial, see if this works for you, super discounted so that you guys can try it out. We don't offer a free trial. We do offer a free trial of one bot. It's not the full system. The full system is really what you need to give it a chance. So what we'll do is we will go ahead and throw the link if you guys are interested. We'll throw this in our chat. There we go. And what I will do is I'll pause here and see, this is kind of what I have for you guys. Do you have any questions for me? How much time do you spend? Sorry, I just noticed. How much time do you spend a day managing the bots? Like 2 minutes, 3 minutes. I just basically make sure they're turned on. That's basically it. So yeah, good question, Aaron. Yeah. What is quant funds? Is it government funding? Well, no, we kind of passed that. But quant funds are basically like hedge funds that use algorithmic trading. That's basically it. Omar, does the 200 come off software when we buy it? Yeah, we can kind of discount that, of course. Yeah, absolutely. And then if you have any other interest in our future webinars, go to pushbuttontrading.co/webinars. If you have any questions for myself, holler, throw it in our chat pane, or if you're watching the recording, you can go here to matt@pushbuttontrading.co. I will see if you guys have any other questions. Let me know. I believe I answered everything that I saw. Any final questions? Otherwise, this is what I have for you guys. Yep. Yeah. At a minimum, even if you guys don't join our program, that's fine. At a minimum, we were able to kind of teach you and show you a new strategy. Again, our technology executes all of these strategies we've been teaching. I think this is the third strategy session we've taught. And we're going to be going through all 8 of our strategies, explaining the mechanics of it. We don't have anything to hide. We want to show you and be open and transparent with how all of our strategies work. So hopefully, hopefully you guys have got something out of this. I'm not sure what you mean by how long has this been working, Amar. Are you talking about how long has what been working? You're talking about our like we've been around for several years. I'm not sure we're asking this been working. I'm not sure. But hopefully you guys were able to get something out of this, some value, and kind of see a little bit behind the curtains of what we do here. Software's been in use for several years now, yeah. Yeah, and we basically iterate on it all the time, so we're always improving it. The first iteration of what we've talked about here today, I want to say 2+ years ago was when we first created it. We had a whole bunch of technology we built previously on a different platform for MetaTrader. So yeah, we've been doing this for years. NinjaTrader the last several years. Yep. So let me know if you guys have any other questions. Otherwise, that's all I have for you guys. I hope you guys learned something. Stay safe, and as always, enjoy your evening. Thanks. Bye.